My initial thoughts on the internet retailer Asos going into the analyst conference call. It's a £5 billion market cap company. The share price currently down about 20% on the back of slowing sales growth and increased costs of investment. As you can see from the share price, it's more than doubled in the past year. It's also got trading on a PE of over 100 times for last year's earnings and 80 times this year's earnings going into the analyst call and the downgrade. There's a room, therefore, for a lot of disappointment, and Asos has shown us the classic double whammy of a growth stock where you see earnings downgrades and you see the potential PE multiplier also lower because of lower growth, and both the lower PE and earnings downgrades both hit the stock price, hence the name double whammy. Going into the results today, the expected earnings growth was something like 30 to 40% for 2014, the year 2013-2014. 63p's worth of earnings was expected, although interestingly, that is down from something like 70p of earnings 18 months ago, according to Bloomberg. But thereafter, again, strong growth, 2015 of 87p, 2016 of £1.17. Clearly, those numbers will be coming down. The key question is it just a one-off hit for 2014, or is the long-term growth under question? Now, Asos doesn't pay a dividend, so there's no dividend support for this stock. In terms of what they announced today, revenue growth of 26% for the 2 months to the 28th of February. That's down from 34% for the 6-month period. UK up 21%, that is a slowing down. International up 29%. International sales very important at 65% of the total. The gross margin, they're saying, is going to be down 30 basis points. That is a bit of a surprise. They're increasing their investment in warehousing from £55 million to £68 million. That's an additional cost not expected by analysts, although that does increase their sales capacity to £2.5 billion, which is 2.5 times current sales. So they're preparing for future growth. Also, costs of China is going to hit the EBIT margin to about 6.5%. According to Bloomberg, most of the city were holders of the stock, buyers or holders going into this trading announcement. 9 buys, 11 holders, and only 3 sellers, so very few sellers. The important thing for Asos to convince shareholders and analysts is that this is just a temporary blip, that the costs of warehousing needs to happen because of to ensure future growth, and that the sales numbers will continue to be very strong. The conference call began at 8:30 a.m. with the city. We will start to see the downgrades and analyst comments coming out throughout the day. But the key for Asos is to really confirm the long-term sales growth of this business is very much intact.